Good afternoon, folks. Welcome back. Got about 9 minutes until close now. Obviously, have some selling so far towards the tail end of the day. Started off the day with quite a bit of volatility whipping back and forth. Again, yesterday, a big day in the market. So, again, when you contextualize things, and take a look at the overall picture, remember where we are, right? Where we actually did do the historical take profit day, which is funny because I talk so much about how we weren't going to do it. And from the beginning of the day, you would expect that we were not going to do it. I would say a lot of this has to do with what's going on in the broader market still. Again, we get affected by every market. If you actually look, we have significant selling going on the treasury side. So yields, or excuse me, the opposite. Yields are coming down, which is causing some significant selling on this side as bonds are being bought, right? So we're just removing demand. That's a bet on this long trade as well. It's just a timing error, right? It's literally just a timing error. And so what I've continued to say is that bullish on equities. If we're going to be able to get price come down to our bid, I talked about this earlier when I was trying to pick up EVs, then I'm not going to go to the ask price. I'll be at the bid all day. Be at the bid all day. And we're getting that. And it's actually, I think, again, this will separate traders. When you buy on fear and buy on this, it's a little spooky down here. I mean, sure. A little spooky down here, but that's what's going to get you paid. That's what's going to get you paid. The difference between here and just even 25 basis points higher is so significant at the option level. It's just not even close, right? It's not even close. And so, I mean, it could be on the underlying as well, but who cares about the underlying? Underlying is what looks scary. And so, I'm all for what we've seen so far. Now, on this side of the aisle, on the small cap side, this has got really beat up. Again, this is all the regional banks that are taking profit now and getting hit. Again, they're still significantly up. It's really important to, again, put it into context. This is consolidating this move. Excuse me. Look at this move. Right. It's really important to still remember where we are. Price does not. It's not about one day or a week. It's about more than that, right? Now we trade in that time frame, but we use the overall in the macro ideas to inform our decision making and when and where we're going to be taking trades, right? And so just because we had to take profit here doesn't change the overall. And this here, I would still say the thing with the small caps is that they're so much more volatile both ways. And we talk about this as very violent price action. I've called for more violent price action up and down. This is very good because it allows for being able to get back into when we talk about getting back into positions. So when we look to get back into these positions, they're going to offer us an opportunity at a better price, and we get to buy on a little bit more fear than usual, which again is what every single time we take a trade, we're betting on more volatility. We got it this week for sure, but it's also just being able to, it's not perfectly timing things because you're never going to. Sometimes you will. Sometimes you're going to have bad timing and you'll have to retake trades. Like I've had to retake multiple trades today, but it's still being able to buy on a little bit more of a discount than before, right? Especially on options. It's a pain in the ass to have to pay a significant premium. It's like, look at, here, Mobsky made a point. Jimmy is up 3%. He says, in the past hour, my puts have gained value. That's a good example of demand just coming in on the option side. If everyone's buying something, then it's still going to drive price up no matter what the value is, right? I don't really know. I think he's talking about just right in here. But the reality is it's not about this. It's about all the demand going to puts. I don't know what the ratio is to calls to puts, but it's definitely on the put side. I mean, let's just be honest. and everyone that you have to remember all the calls. Wall Street owns about 90% of GameStop. Do you know why? So they can sell you guys calls. That's why. They own it so they can sell you calls. Wall Street doesn't sell naked calls. They sell covered calls. So to cover them, they have to be in. They've got no problem doing that. They get no problem doing that. They're going to get paid on that side of the trade. Have you looked at the premiums? You know how much it costs for an $800 GME call that expires in a few days on Friday. Costs like $5.50 for a fucking $800 contract. $5.50. $550 per contract for 100 shares. $550, and it will never happen. That's for that's for in 3 days. Fucking 3 days. An $800 call. People are buying it. There's like 15,500 open interest over there. That's a lot of fucking money that went to buy something that's literally worthless. It's so far out that I don't even think the chart goes up that high. It doesn't even make sense. It's insane. And again, so they're willing to take a hit on the underlying for all the calls they're selling. And now the puts are there. Now they're going to be making money on the puts, and they're covered as well. They're hedged against the puts because they're already in the position. Yeah, GME is going to get fucked for sure. If GME doesn't get fucked, I mean, I don't know. I mean, it's not going to be tied to earnings. The point is, it's not tied to earnings. It doesn't matter what happens with earnings. It's the fact that it is happening, but it doesn't matter what happens, right? Earnings doesn't fucking matter at all. What are they going to do? They're going to have a fucking party. They're literally going to have a party. I would bet money right now. There are bets right now on the street that there's going to be a party during the earnings call, like a fucking party between all the board members, because they're still up like 1,000% year to date. They could just do a fucking offering and get paid instantly. Fucking sell the company. Get the fuck out of here. What are we going to do? Get it out. Thank you, guys. Thanks for the points. Yeah, silly. But anyway, nothing has changed. Nothing's changed. In terms of closing action, this is just, who is this? This is just the people with the rhetoric that I have. All right, let's buy this. What are we doing here? What are we doing over here? Is this GameStop? Is that what that is? Or is the market tied to the GameStop going down? You could probably figure out, I'm sure it's correlated right now. You know what it is correlated? You know what is correlated? Spot VIX to GameStop. Go take a look at that. Go make a comparison between the Spot VIX and GameStop. Gimme. Go do that comparison. I've done that a few times. There's real reason for that though, which is again that price is getting gamma squeezed. And what is gamma? What is if you're betting on gamma, what is that? You're just betting on volatility, right? That's all it is. What do we got? We got 2 minutes. We got a minute and 20. We'll wait for market close to talk about positions. In terms of this stuff, I mean, again, I've already talked about this. I'm going to take some of these things. If you look at the ARC side, Kathy can't get us any more humble, so literally couldn't get more humble if we tried. So it's time for the greed signal. Is she going to tell us that losses keep us humble, so gains keep us greedy? Is that what we're gonna? Is that where we're going? All right, what do we got? We got 40 seconds. 40 seconds coming off the low. Coming up the low. It's gonna be funny. I mean, I don't know. I'm gonna say the same thing I said yesterday. I expect Asia to be up today. I mean, I guess what are they now? They're gonna react to this market and say that the census is down 0.5%. That's not good. We did what? We did 2% yesterday. Yeah, I think I'm gonna be okay with that. So it came into the resistance. We got this sort of trend line in here. This idea, where it is very good for the upside. What do we got? 1 second. There it goes. There it goes. After hours is going to be green, obviously. We don't need to look at that. I mean, again, coming off the loss, I mean, is this going to be green? I don't fucking know what's going on with the small caps. They need to consolidate. Not doing anything. Whoops. It's not like I bought something over here, right? Didn't buy anything here. We already shifted a little bit, right? Not buying anything here. I do have a few comments about, before we go further, about like the energy side here. I wanted to buy back here. So again, we had the pullback consolidation. Wanted to buy back here. Didn't happen. Got stopped out here. Now down here, I mean, now we're getting back to a spot where, listen, there's no institution that's betting against the crude cycle, like, or the oil, like the super cycle of commodities and everything else. They're all betting on the economy and everything. This is more, again, this has more to do with positioning like positioning in the now and not with actually where the expected value is in the future. Again, where the price is now is not where it's going to be in a fucking week. I know that's obvious, but a lot of times we have a hard time, and I know a lot of you have a hard time buying at a low because you're just like, well, price is right here right now. Yeah, in a fucking week it's not going to be there. Is price going to stop moving? Right? So anyway, um, I'm very close to pulling the trigger here. I think you could have preempted it in some places today. Some of the trades I took, they're not fully like energy within Exelite or anything like that, but there are things obviously within the Dow and things like that, XOM, that I took early. I think we're in a spot where we can take some of these trades now and do the same thing as what I'm saying in other trades is just take the trade. You get stopped out, oh well. But you could honestly just take these trades and in a fucking 2 weeks from now, they're going to be up, right? If we have nothing else to do with, a lot of us are on cash. I know a lot of you guys are on cash now because we've sort of rotated a little bit. Whether you spent it all on growth or not, I doubt it. I really doubt it. Some of you, I really highly doubt your ability to buy at some of the lows, and I don't blame you, right? But because again, it's not like I'm putting all my cash behind everything. I'm putting just enough to capture what I can, but obviously we're still on cash. And so taking a look tomorrow, again, there should not be surprises for when the market starts to I hate the attitude the market has right now of the last 2 weeks. It was every single day that the yields would rise, tech got fucked, right? The market goes, oh, the market's crashing. And then the next day, oh, yields stabilize, the market's up, NASDAQ does 4% because yields stabilize. What is the point of that? And then the next day, oh, yields crash, and the market's down, the market's up. This weird back and forth pamp and crash thing. Again, I've talked about it for a while, and everyone does it. Stop. You're part of a move. Stop. Doesn't make any sense to do that, right? And we're doing it again a little bit here. We're doing it again a little bit. It's really important that we just sort of remove some of those ideas. Again, those are just weird emotional responses that you're like looking at something in such a finite. When you're looking at something on intraday candles, you're only looking at it in the sense of, okay, where's it going to be in the next hour when you're looking at these intraday moves, right? You need to step back and remember that shit doesn't matter. That's why we don't pay attention during lunch. It doesn't matter. Yes, we trade on a shorter scale. Yes, we care about every candle when we're looking to enter and exit, but otherwise it doesn't matter. It doesn't matter. We're talking about a move much further on, and I mean, we're not going 5 years from now, not even 2 years from now. That's not what we're talking about. But it does affect everyone else's decision in the way they enter in position, right? And we need to respect that and stop the silly sort of, I don't know, I'm not going to use big words because some of you will hit me with the verbiage, but let's just chill, right? Bought a lot today. I like to buy on the lows. I like to buy on fear. Get stopped out a lot of times. Willing to get back in a lot of times, right? There's definitely some scary things out there that if you buy them, you're going to get fucking paid. Again, we cast a wide net, try to capture as much as possible. We may not capture anything this time. We'll see. But from what we've seen before, should be able to follow with my historical value or my historical average, which is 30% of trades are 100%. The trades that are over 100% are the ones that make you something, right? 1,000% on WBA covers about 2 years worth of losses, right? Let's just be honest, it takes one trade, right? And so those survivors of you, I'm going to make one comment. We're going to talk about some things, and we'll look at the GME, and because that's really the event of the year. For you survivors out there, those of you that are now full-time traders because you decided to make the dumb decision of quitting your job and trading full-time, which is probably, it is stupid. Like, it's just stupid, right? I know, because it was stupid. I mean, it's just dumb, right? For you survivors and those of you that are really relying on income from trading, your fear of needing to make money is going to hurt you. I'm going to make this point today because I know today is probably a day that is going to affect some people when it's really a good day for you. And that's where the difference between being able to look at something through just price alone and no bias about yourself and not letting yourself get in the way. You shouldn't be making decisions based on yourself because your positions are not the market and they're not the price, and they're not going to be where the price is going to be just because you're in a position or not. Those of you that feel like you need to make a certain amount of money every single week, every single month, in over a year, and have certain goals, need to remove all of that, right? What you want and what you feel you need are not going to help you. They're going to only hurt you. And every time you look at a trade, you're going to be thinking it through the lens of, okay, I need to make a certain amount of money, so I'm going to need to make a certain type of trades. These kind of things are going to hurt you. So even those of you that are not like trying to live off of trading, those of you that make decisions this way, again, you have to remove the money part. And this is where when people say don't be emotional, that's just too broad of a statement. It's true, but it's too broad of a statement. It's this kind of thinking that, oh, I need to make like a few $1,000s. Let's say like I need to make $4,000 a month to kind of go back to like an average salary or something. Yeah, let's just be honest. If you don't have $100,000 account, it's gonna be really hard to make 50% of $100,000 account in the market every single day is 50,000. So that's gonna be fucking hard, first of all. So you already need to tone down expectations. You're gonna have times when you literally can't make money. There's nothing you can do about it. You're just not gonna make money for a month, right? Because you're putting positions on or whatever. So then in that moment, what are you trying to do? You're trying to day trade and trying to fucking force trades. You're gonna lose money. You're gonna lose money in trying to take certain situations and turn them into something else because of your situation is going to hurt you. I'm not making this as like a personal thing to anyone, but it's something to think about because I think right now is a good time to mention this because I see it on FinTwit and everything else, and I know there's people in here that feel that way. You gotta remove yourself from the equation, especially if you're trading in the style that I'm trading, because I don't give a fuck about money, and everything I talk about goes through a not giving a shit about the money part and just caring about price, right? You have to just remove any idea of what you're going to gain out of it other than just a risk reward, right? Don't think about it of yourself, right? That's my one spiel of today. Are we getting numbers here yet or what? GME, I see 12 basis points. It's up. It's up 12%. It's up 12 basis points. 0.12. 0.12. All right, let's talk about some individual positions. We'll see when those numbers come out. Zoom had a great fucking day today. COVID winners had a great day. Now, we just recently went into COVID winners. Obviously, just yesterday, I talked a lot about growth. But we've been looking for these trades. We got paid here on these today, and these are going to be great trades that we got in at a low, right? The confirmation today of more of, I would say a momentum and chasing sort of trade that came on today. Because again, these are up, and the market's kind of just, it was sort of a stop day due to the big day yesterday, and then on the value side, obviously lost some points. But these today doing so well: Zoom, Peloton, Etsy, Netflix, ZI, right? Some of these COVID winning kind of tickers did very well. I mean, I know it doesn't look like much on the chart, but again, we've been talking about all of these charts that look like this, that have this sort of triangle approach here, or a double bottom kind of idea. These are all going to lead to further upside, and the fact that they continue to put points on today, I think, is a very good confirmation of what I'm sort of speaking to of an idea. And these tickers are also proving again that during volatility they do well. I've talked about this idea of a lot, that tech, specifically like tech, I don't mean like growth, I mean like the COVID winners and like the tech, the mega caps, right? They do well during volatility. Now, obviously, the spot VIX is like fucked up and the value is like completely off. Yeah, it went up a little bit. Whoops, sorry. Yeah, it went up a little bit today, but it's kind of fucked up. But we know there's a little bit more volatility today, right? We saw a lot of selling on a lot of different fronts and big moves everywhere, right? These did very well today. You were never in a position where you were like, well, shit, do I have to get out of this here? No, of course not. There was no point. There was no point from buying anywhere in here that you would need to get out here, right? A lot of bid from today. Look at the Piton chart. This is very clear, right? That's a very good sign. It's a very good sign. I'm going to make a mention of the ZI chart as well. This is not the true Zoom. This is Zoom Info, ZI, right? ZI was one of the top, I think is number 6 in the last year still of most points gained. We talked about this trade, put this trade on last week, betting on volatility this week. This gain yesterday, 12%. I said we're going to hold it. right? I said you can't guess the top. You don't get to take profit on it. Here, another 3% today. A 3% that's larger than the 3% that was gained in here. That's for sure. A lot larger exponential because, again, you have an expectation of some take profit. Didn't happen. We're in this very volatile zone. This is a great trade. Again, it only takes one trade. You make a few 100% on this trade here, all your worries about your other trades go away, right? And that's kind of the problem with what I just talked about a few minutes ago is if you don't have these trades that cover some of the other ideas that you had that may not pay off, then it becomes very difficult, right? It becomes very difficult to then have the confidence to take those trades. I probably got stopped out on, I would say, 30 trades today. I probably got stopped out on 30 trades, like entries, 30 entries today, different positions, right? Just trying to get in and force it in there to get a low. Yeah, I got them all at close. Basically, all of them got filled at close at the bid, right? Basically, I filled on all of them at bid that I got stopped out earlier. If you don't have trades that are paying you, it's very hard to have the confidence to do that. I know. I've had times where I feel like I need a revenge trade and shit like that. This is a good example of one from last week that we got paid on, right? Think about that trade there. TME as well. There's a few. I don't know how the best way to talk about this trade. I talked about it already over here of taking the opportunity when the break came here. The pushing part is probably important. Think of today. Today we had some selling. It's very easy to look at this chart here today and to feel like you need to get out because of the volatility that was involved. This first tick here doesn't matter. I talked about it just briefly at open. We had this very quick spike back and forth. That does not matter. That does not affect your trades. You wouldn't get hit by anything. Stop would never hit anything. But if you just remove some of this here and just think about, and again, it's because it's reacting to the Asia market very briefly, right? If you think about this price action here, it's very easy to all of a sudden, when this comes down during lunch, to feel like you need to get the fuck out, and that it's going to be a tough time, right? Just because the rest of the market, you need to remove averages and everything else when you're trading something that has nothing to do with anything else. Did you take this trade because everything else was breaking out too? No, this trade's all by itself. This trade's literally all by itself here. You need to keep pushing the winnings in those situations. Again, not to take away from people that take profit. No one should tell you that that's just bad. No, you want to take profit home, you need to realize it. And I talk about this a lot. But there are situations where you need to keep pushing trades because they haven't shown you any sort of stop in price, haven't started to roll over, haven't reversed, haven't done anything. They just keep going up. This is where not looking at intraday is important. You should just be looking at daily candles on this chart to make your decision, not intraday. There's multiple times intraday where you could have gotten shaken out of this position, right? Just here today, talking about. And there's situations where you open like 1% or 2% lower, and you're like, well, shit, I got to get out of this. Then it goes bid, right? I want to just emphasize some of these because, again, it's important during this kind of time that you're able to buy and you're protected with trades. That's the idea of hedging. I don't like the idea of hedging with the strategy calling it hedging with the strategy we had because you're still literally betting on shit to go. You're still betting directionally. It's not true hedging if you're betting directionally on both of those trades. Like it's just fucking not. Like, I don't care. I literally don't care. If you're trading options and you're buying calls, you're buying puts, there is no such thing as hedging those unless you're spreading. And that's how we hedge. We'll bet on volatility. So like I talked about from the end of last week, I put a lot of straddles on. Because all we're doing is betting on I call them convexity trades. You're literally just betting on gamma and you're betting on movement the next week. That's all you're doing. And it could go up or down. And now we've had some situation where the straddle paid on the low side, some paid on the upside. It doesn't really matter, but that's only that's like the only way to, and that's still a risky trade. That's not, you're still, if it doesn't move, you're going to get fucked. It's still risky, right? There's really no point for most of us here to hedge through like traditional methods because you're never going to be able to do it, right? What are you going to do? You bought calls. What are you going to fucking do? What's the direct correlation to that? The only thing would be to go short, to sell things, and then it doesn't even make sense. You're just making another risky trade. You're adding more risk on. So I wouldn't think about it through there. I'd be just making complementary trades, and that's where again you make these trades that have nothing to do with the averages, and that's what we do. Every single trade is like that for us. So we should already be hedged in a tradition, not in a traditional sense, but in the sense of the way in which we're trading. Right? No one here is. I mean, no one here is besides people that are trading shares are doing anything that's not being somehow diversified through casting a wide net, and then through the way that we're trading, no one should be trading shit that's just junk anyway. Like we've sort of gotten out of the whole buying weekly out of the money options unless there's a real fucking reason to, and especially not buying anything that's 10 cents, right? We buy things that are worth something, right? Otherwise, let's just go quickly through mega caps. Obviously, the Apple trade yesterday from open lost 69. Nice in the chat. 69 basis points today. We did 3% yesterday, so that's a great day for the gain yesterday, which was to the market unexpected, right? So great day today. Posted a higher high as well, which is an important factor to that. Again, just barely took profit on a big day yesterday. So great move for Apple to see how we'll see how that continues. Again, expecting a lot of upside in quickly. We're expecting it pretty quickly here as we get more and more breaks. Facebook, our other long trade, right? Same thing applies here. Now, the one difference on this chart is yesterday we had that very sort of strange spread. And I talked about it a little bit, the way the candle formed. You now have this sort of inside bar here, which I wouldn't really technically call it sort of an inside bar and that it's going to come down here, but it's very much in the sense that's what it is. It doesn't take away from the overall bias of upside, but it is possible that we get further sort of take profit here, maybe a lower low tomorrow, maybe at least from open a lower low and then further upside. We'll see. We're not going to get shaken out of this position or something. That's not what's going to happen, but it is something to keep in mind that this is a bit of a bearish candle comparatively. And again, it's just due to the way that the candle formed yesterday. This very large spread, but that's just what it's fucking doing right now. That's just where the market is, right? This is still a great trend. Even if there's a stop day, it hasn't had a stop day yet, right? Besides today with the market. So, looks very good. Microsoft did very well today. Again, this chart is, I mean, all the mega caps are all wonky and all over the place. They're not correlated. I mean, they are correlated on an average, but they're not the same chart at all. Usually they're the same damn chart. I talk about that a lot. None of these charts are the same. They're all in different places. Apple's down here. Microsoft's up here. Google's fucking God knows where up here. We'll look at that in a sec. Great day here. I mean, this candle here, I like that. I mean, sometimes it can be bearish if it's coming out of an uptrend, but this attempt to break through is very bullish. I would say it's very bullish. So, big fan of that. Amazon's trying. I would just categorize it as the other growth tickers that have the same form. The problem is all the fucking supply. Look at the candles. It's just too many candles. It's too much supply. I will take all of the others over this trade. Absolutely. So I wouldn't be taking this trade over any of the other mega caps or any of the other tech tickers until this gets the fuck out of here. I mean, they're all going to get out of here, but this has just too much supply. To work through, and it's just not worth it. Google continuing to move here. Again, look at where this is comparatively. It's the same thing. You can't really take that trade. It's in too much supply, right? So we'll see. What are we at? We're up 4%. We're up 4% on GME after hours. Oh no, boys. What are you doing? Are you buying? Let me take a look at the profit section. Brian, minus 100. Not even going to front, he says. Today was AIDS. Okay. Today was AIDS, he says. LSU, minus 1,000. I think he's bag holding Neo from the top. Movsky, minus 4%. Probably pushed in some places where I should have taken profit, but I'm betting on the upside, so we'll see. Okay, I like that. Minus 5% from Spoon. Gave back some gains, but set up for the next day/weeks. Okay, I like that. And C-Trader, minus 980, bought EVs at close. Ooh, okay. So everyone's basically doing the same thing. Well, hopefully the market goes. I mean, are you guys going to be hoping? Are you going to be sweating over the night, hoping that your shit goes up, or it's a calculated risk, right? That's where, again, that's where it matters. That's the difference. That will be the difference. We should be judging based off of stress levels. If you're going to have high stress due to trades you're making, those are not good trades. You should always calculate that. You should calculate stress into tail risk anyway. You could have a fucking heart attack. That would be quite the tail risk, right? So if stress contributes to that, and low amount of sleep contributes to that, then that's a tail risk and probably should be added to your added to the calculation, right? GME 4%. I mean, I don't even think we've actually heard much from them yet. So I think it's 5 p.m., right? 5 p.m. is when the earnings come. So I don't know what I think that's just reaction to the fact that it's so low today. Might be just rolling up. We'll see how again, it's 5. We're not going to be here that long. What was the other chart? Oh, I was going to say Netflix looked very good coming out of the same idea, right? Same idea here. Netflix also has some other ideas. You might be getting some charts. I mean, you're probably going to be getting some of these charts here. I talked about a lot of those double bottom sort of charts are going to be coming this week. I don't know if this is just kind of a mess here. Again, the same thing is sort of a mess. It just once it breaks through the level, it breaks through. So maybe not that chart specifically. What were some other charts? EA had a pretty decent day. Oh yeah, Walmart from the low over here. This trade has been pretty funny so far. What was I going to say? You know, when you look at some of the, again, there's overselling that's happening a lot. And it's hard to tell when it's overselling and when it's true, just sort of price action. And so it's kind of like when you look at where the Dow is here, right? So if you look at where the Dow is here, and then you compare the other tickers within here, you go look at BA. Look at this down here, right? And I talked about this sort of droopy sort of price action. And then you have a candle like this here, right? This is probably just overselling here. This is just overselling here, right? And so, again, when you look at this price action, this is just bad. This looks like an intraday chart. This literally looks like 15-minute candles. That's what that looks like. And so, trying to figure out the best way to approach getting back, like again, we're bullish on these ideas. They're just going through a bit of consolidation after the breakout. Trying to figure out the best time to enter these, we need to take into consideration that there is overselling happening. So just like the time we bought GE over here, overselling. We bought Apple because of overselling. It's just the price is terrible, right? Facebook, same thing. Facebook got like nasty price action. So going to tomorrow, it's really important to find levels. A lot of charts are actually like at pretty good levels, and so again, we're buying everything. We're trying to fucking put everything on. Pepsi didn't move as much as I thought today. I think it was just because the market being down sort of on that side. I expected this to just fill through here. It's still, I mean, it's up again today. So let's just be honest, good trade. But trading around levels, right? It's very important to understand. I talked about this from the open that we've been trading so much on breakouts, right? And we trade from pattern breakouts. But in terms of tickers that have already done so and that have been trading through all-time high and just sort of we keep taking the resistance breaks, supply breaks, it's really important to remember that buying on support is the ultimate sort of, it is the thing to do. That's what we want. That's the goal, is to be able to buy on support. A lot of those charts that we've only been trending up, right? They literally have just been going straight up. Almost, right? You got to remember that those charts are better to buy on pullback still. And that's when you need to be buying them. Some of those are coming into levels that we haven't seen very recently. I mean, maybe we saw on the way up, right? We saw it on the way up, but we were buying it through the level, not on the level. Those charts are really important. If there's, again, I might just do a big dump of fucking charts tonight, maybe like 100 charts with support resistance levels on them. Because again, when I say buy everything, that's fucking one thing, and I don't want people to take it the wrong way and then blame me for their really dumbass trades because you buy stupid shit and then say, hey man, you said to buy everything, so I bought these 50% out of the money weeklies and I lost money, so you owe me. That would be ridiculous. And again, have common sense. when we're when we're being realistic or not. But maybe I'll just drop a bunch of charts because that's probably going to be important, especially if you didn't. I understand there's a lot of buying today on support, but just to then manage that trade from where you bought it. And like again, are we on a level on the SPY right here? Most of you would be like, I don't know, maybe. Yeah, we're on a level right now. You can see the wicks across right here, right? The wicks across right in here. So yeah, we're at a level. Now the trend, I mean, again, you have another trend in here, but in the log scale, no. You have another trend in where the price is right now, right? I'm just sick of copying and pasting these trend lines. You're on another trend line here. We understand where the NASDAQ is in terms of its levels. Don't get away from that, right? A lot of times we've been doing so much trend trading and breakout trading that we forget about how exactly we trade and swing between levels. It's okay. A quick lesson before we get the fuck out of here. Okay, here's you have a chart and price is trading in between these levels, right? All you're trying to do. Okay, so the first question is my chart bullish? Okay, let's just say I post a chart, and so now you just know it's bullish. There's other ways to know a chart's bullish, but let's just keep it really simple, right? And then there's a level, there's two levels to trade between, right? You know this chart's bullish that you're trading. That's all that matters. And so you know you can trade it, which means you can buy it on support whenever it's on support, right? So whatever this chart is and whatever the price action was and whatever it's been, right? Whatever it's been, as soon as this bad boy comes into support, you know, since the chart's bullish from what we've talked about, maybe the sector, maybe I posted the chart, whatever it is, that you can be buying it. It's just so important to realize that maybe the time you took this trade last time was because it broke through these levels. You need to remember that you can buy it on here as well. So let's say you took this trade because it broke through the level. You took the trade, and then you took the trade again. Then you had to take profit. You got to be able to take this. In the situation here really is that this is like the top of the trade here. In your minds, or in what you've seen, is that this trade has been coming from like down here this whole time, right? And so all you see is that this is like at the top and it's coming down here, right? You don't see this part yet. You just see that it's right here. This is where you have to fucking buy it, right? You just have to be buying it on this, and this again has nothing to do with the SPY. I'm just making an example. Just because the chart's been looking like this and you're taking it on breakouts, it doesn't change the fact that this, so let's say it was resistance, right? Once price is on top of it, that's become support. That's support now. That's support, right? As soon as price is up here, this is support, right? You have to be able to buy on that no matter what happens. This right here could be 20%. This could be a 20% pullback right here into the support. You got to be willing to buy that and realize, okay, my upside is this 20% retracing to the high. My downside is I get stopped out right below the support. So if your downside is break even, and at most, maybe whatever the spread percent is, which if you're trading something that has over a percent spread, a 1% spread, then you're out of your fucking mind, right? You're just out of your mind. But maybe you lose 1% or 2 from the spread, depending on what you're buying, right? The spread on SPY is 1 cent. The spread on SPY is 1 cent, and when the spread goes to 2 cents, the market loses its fucking mind. It loses its mind. We've had a few examples of that in the past where the spread goes past 2%, 2 cents right here on rotation day, and right over here the day the market drew back in September. Also on the June overextension over here because we sold on a gap down from like 3%. So very rarely does the spread go over 1 cent, right? Just know your levels. Look at your charts and know your levels, and that will help you with your confidence and your ability to do things. And you just gotta have to trust the level. The level may not work, guys. Sometimes it's not going to happen. But if you're able to take that trade every single time, it's going to work more times than not, right? It's about the consistency. Yeah, again, not every trade is going to work. It's just not. But you have to make every trade the same way every time, right? The trades we made at close today, we made them because that's how we make the trades every time, right? That's just how we make the trade. There's no other way to do it. If price comes down tomorrow, is that going to stop us from making another trade? If the trade's there, no. You don't all of a sudden just stop because one of your trades didn't work out. Your trades are not the market, and they're not the price, and they're not the overall picture, right? Some of you might lose on every trade, but yet here the rest of us are still making money from trading, right? That's how it's going to work. What is the percentage of people in this Discord that are going to make money? Well, it's probably the same as the market, but just a little bit better because they get better information, right? But it still doesn't mean you're going to be fucking great, right? To be a professional at something, and again, to wrap up my point on people that are doing this full time, to be a professional at something, it takes a lot. It takes a lot, right? Think about your normal jobs. You work like, I don't know how much normal people work, like 40 hours a week, but here in the city we work like 80 hours. But either way, what do you work every single day for like 8 fucking hours, right? So you're talking about a lot of time that you're becoming an expert at something, right? You're literally getting paid for that because you do it every fucking day, and it's a lot, and you've done it for a long time period of time, and might be like 10 years of experience in it, and it lets you get paid, right? This thing that we're doing here is not any different, right? I talk about the 10,000 hours of learning experience that certainly comes into it to then make better trades, but it also just comes into like the professional part of it is that not everyone can do it, right? And so if you're going to do it, then you have to really commit to it. Not everyone is going to be a top banker. Not everyone's going to be a fucking CEO. Not everyone's going to be a professional football player, right? All these things. I know it's really obvious, but it's so important to remember is that not everyone's going to be a top performing fucking trader, and you're not going to always be winning, right? Think about like professional anything. You're not always going to come in first. You're not always going to win, no matter how good you are. Michael Jordan won 6 fucking rings. He didn't win all of them. How many? I mean, he didn't even play that many years. Okay, we'll use LeBron, since some of you hate LeBron anyway. Okay, LeBron's like a really good fucking player, right? Does he win every year? Well, yeah, he kind of goes to the finals every year, but he still doesn't win every fucking time, right? That's the point, right? And that's the best player. What about all the people underneath that? You look at the best player and they don't win all the time. What about the people underneath that? Well, then now it really comes down to, well, shit, they fucking maybe not even won ever. They just kind of have better than average, right? The same thing applies here. You're just not going to make fucking miracles happen. You see some flashy things. Sometimes I make a trade that seems, there's a reason I don't post P&L and stuff. It's some flashy trades stick out, and then it's like, oh, I'm going to make all my trades like that. No, fuck the P&L, right? Who cares? Who cares? As long as you're making consistent money, then it doesn't matter. You can ramp up the consistent money by putting more money on your trades. That's the only difference, is how much money you put behind the trade. As long as you're already consistent, then all you need is more money. That's it. So those of you that are consistent and make a consistent amount of money, all you need is more money to put behind the trades. That's it. That's the only difference. And as long as you're able to be consistent and then it's not about the money, you'll be able to do it. You'll be able to take a $1,000 trade and turn it into a $10,000 trade, and it won't even phase you, right? And it will be the same consistency behind that trade. It's going to be important because right now, think about buying over here on the 5th. We bought at the low on the 5th, got fucking paid. Now some people are freaking out about where price is up here. Look at where the price is. Okay, where was it over here? What about over here? What about here? What about back here? Again, chill the fuck out. Price is going up. Buy the shit. Let's go. Let's make more money. Market up or down, we're going to trade it, right? We're going to trade it. That's just what we do. Today doesn't matter. We're thinking past tomorrow. Just keep going with it, right? Consistency, stay disciplined. You have a good strategy, you have a good method. Don't forget about your successes, and definitely think about where you fuck up. Your losses will teach you a lot. You don't make those dumb decisions, it will definitely help your average, right? Definitely help with the consistency. Expect a lot of charts tonight, most likely. That doesn't mean you have to look at them all, but just look at the ones you want. Look at what you're trading. And again, I would say stick to your level of trading. Some of you know what your strengths are, your weaknesses. Play to those. Understand what charts are for you. I will see you in the morning. Have a good night, evening, afternoon, morning, wherever you are, and enjoy.